Hi, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for February 9th, 2015. Go on, take the money and run. It's more than just a Steve Miller song. It's a method that I will sometimes use for taking profits in the market. There's two kinds of markets, those that trend and those that don't. In a trending market, it is best to be patient with your winners and only exit when there is a pullback through support. In a choppy sideways market, it's better to sell strength, sell the rips as price comes into resistance levels or runs up and away from a trend line. You have to assess the market and choose your exit strategy accordingly. Over the last month, we've had a very choppy sideways market, a tremendous amount of volatility, but without a good direction. The market goes up for 3 days, it goes down for 5, it goes up for 6. It's really all over the place without trending in one significant direction. And in this market environment, it seems that the best way to make money is to sell strength and buy weakness. All right, let's get into the analysis. Here's the long-term chart of the S&P, and you can see we had a pretty good up week. We sort of saved ourselves from that threat of support that I talked about last week, and ended up closing up significantly for the week and above the open. You can see that there's still a lot of volatility, a very choppy market. And if you look back over the last 5 weeks, we've really gone nowhere. We're essentially back where the market started at the beginning of January. Now this is a good sign because we haven't broken support and the long-term upward channel is still intact. But that also demonstrates to us that there's a tremendous amount of uncertainty. And when we look at the intraday chart going back the last month, you can see some of that uncertainty. Notice the wild swings up and down. Here, as I said, we get 5 days of up move, 6 days of down move, and then this week we had 1, 2, 3, 4 days of up move. But at the end of the day on Friday, we saw some weakness right around resistance. I've drawn that red line of resistance, and we went above it this morning, and it was looking pretty good, but then the market sold off into the close. Likely investors not wanting to hold a lot of positions into the weekend given what's going on in places like the Ukraine. So the end result then is I expect we will see a short-term pullback in the market early next week, expect more weakness, but the market is trying to break that line of resistance. So hopefully we'll see the formation of a rising bottom, maybe around 204 on the S&P, go back up to that line of resistance and maybe try to make a breakout through that price level into the end of the week. It's very rare for breakouts through resistance to work when it comes from a trend. Typically, there's the formation of a stable pattern, of some sideways trading at resistance, and then a breakthrough. You can see that we didn't have that stability pattern. We simply went up, 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 up through, and that's why there is that profit taking. So again, this is not by any means a negative impression of the market. I do think we'll see some short-term weakness next week, but ultimately trying to build that basing pattern that can give us that launch through resistance. What's interesting is that the Russell 2000 market is actually looking better than the S&P 500. Now what's the difference? The Russell 2000 are the small cap stocks. The S&P 500 are the large cap. And you can see that the Russell is very near resistance. It came right up to resistance this week, and so we could soon get a breakout through resistance. And I think what will happen then is we'll begin to see a rotation out of the large caps and into some of the areas that have been overlooked, the small caps being one of them, Europe being another area that I think has been overlooked over the last year and may start to attract capital. Now, great showing for the Canadian market this week. I've been kind of negative on the Canadian market for some time, but it actually broke its downward pullback this week, largely because of stability in oil. We had a lot of bottom fishing in the oil sector, but also with the weak Canadian dollar, we're seeing that manufacturing sector of the market in Canada doing really well and people speculating that it will do well. And that's giving some rotation into those stocks and giving some strength to the Canadian market. So big turnaround for the Canadian market, not considerable upside. I think we're going to get stuck up here at the highs from the end of the summer. But nonetheless, it is a positive showing for the Canadian market this week. Now here's the intraday chart, and you can see that that bounce back that we've had, mostly driven by a bounce back in first the mining sector, and now we're seeing the bounce back happening in the energy sector. By no means are those sectors out of the woods. I mean, I think they've got a lot of work to do, so I don't want to get too optimistic about the Canadian market, but you can't argue with the fact that the bottoms are rising from left to right when you look at this chart. Wouldn't surprise me if we see a little weakness to start next week, bringing us down to this green upward trend line, and what's important is whether that upward trend line remains intact. TSX Venture, it's really hard to find anything positive, but I'm going to try really hard. You can see here there is a little upside break from this very short-term pennant pattern. That's about as optimistic as I can get. It does point to the possibility that this market can get a little higher, but it still has a ton of work to do to reverse the long-term pessimism in Canadian junior commodity stocks. Of course, this market is probably 2/3 commodity-based stocks. You do have some technology in there, and those stocks are still worth considering, but the commodity sectors are still struggling to turn around, but this week they at least made a step in the right direction. Well, last week I talked about the parabolic upward trend in Treasuries, saying that it was well due for a pullback, and that's exactly what we got this week. A pretty significant pullback in the bond market in the US, still way above that green upward trend line, so I think we can see more weakness in the weeks ahead. The market is really starting to look toward the US Federal Reserve starting to raise interest rates, and of course that drives down bond prices, interest rates go higher. US dollar also in that parabolic trend. It too has run away from its trend line to the upside. It's pulled back a little bit this week, but it keeps recovering, and it's kind of a mixed situation here because the US dollar is parabolic. It deserves to pull back to the trend line, but when interest rates start to go up, well, that makes the prospect of owning the US dollar more desirable, and so you've got these two conflicting forces at work in the market here. I do think the US dollar is still likely to pull back a little more, and that should help oil stabilize because there's a real strong correlation between US dollar strength and oil weakness. They tend to go in opposite directions. Here's a chart of gold. It gave up a little bit of upside this week, pulling back, kind of expected. We talked about this lately, about how it was knocking up against that downward trend line, and you could feel last week that it was going to start to roll over, and that's exactly what it did. Pretty strong selling day on gold on Friday, but still we're in a pattern of stabilization. Do I like gold to go higher? Not particularly. I think there's some short-term trades that can happen as there's some volatility and some stability, but the market for gold still has a lot of work to do to reverse that downward trend. Oil also way below its trend line. Simple rule in technical analysis, when price runs away from a trend line, whether it be up or down, it usually comes back to it. So we've started to see that this week. I think there's still more upside in oil before it hits resistance at that trend line, but then the challenge will be first the formation of a rising bottom, and second a break of the downward trend line. That's going to take time to play out most likely, so I think you have to approach the oil and the energy stocks with a real trader's mentality, very short-term oriented right now. And finally, here is the VIX, the old fear index. You can see we've had a pickup in fear this week. Kind of interesting because the markets went up, and yet fear also went higher. And you're really getting a sense that that volatility, that expectation for volatility continues to be strong, and I think this points towards some selling pressure early next week. We saw the VIX rally late in the day on Friday, and it was almost as though people were trying to buy some insurance over the weekend. All right, so my outlook, still long-term bullish market in the US, but you know, there's a lot of volatility, a lot of chops, so I've got a neutral rating short-term. I have a neutral rating now on the Canadian market, both short and long-term. You know, it's trying to turn around, it's trying to stabilize. We're seeing money rotating into some of the sectors that benefit from a low Canadian dollar, and that's helping this market. Still work to do in Canada, but certainly a lot better than it was looking even just a month ago. Gold neutral. In the long term, it's trying to stabilize. It's still in a long-term downward trend, but it is trying to stabilize. But in the short term, that selling pressure on Friday makes me think that we could see more weakness early next week. Oil, bearish long term, but neutral in the short term. It's trying to bounce. I think it's got more bounce in it, given that it's still far below that downward trend line, but you got to take a trader's mentality approach to oil. So US stocks had a pretty good week this past week, but they were real soft into the close on Friday, and that sets up for some weakness early next week. The longer term trend remains strong, but you should expect that volatility to continue, and therefore you want to take that hit and run attitude with your trades right now. Canadian stocks have surprised with a break to the upside through its pullback line. That's a positive, but still work to be done. Gold is backing off and oil trying to stabilize. Well, that has been the Stockscores Market Minutes for, February 9th, 2015. Have a great week in the market and trade well.